Let's be honest for a second. Watching the market just completely tank, it feels like you're in a nosedive and you forgot your parachute, right? You see red numbers everywhere, all the headlines are screaming about billions wiped out. I mean, it's enough to make anybody's stomach drop. But what if a crash isn't just some catastrophe we should be afraid of? What if it's a cycle, something we can understand and maybe even navigate? Okay, that's what we're going to do. Let's build a real survival guide for the next market storm.
We're going to start with this absolute classic from the man himself, Warren Buffett, because it really gets to the heart of the mindset we need to have. This is all about flipping the script. It's about seeing a downturn not as the end of the world, but as a moment of potential opportunity that just so happens to scare everyone else away. This idea is going to be our guiding principle.
So first up, let's totally reframe how we think about crashes. They are not freak accidents. They're not these black swan events that just pop up out of nowhere. No, they're a natural, recurring part of the economic cycle. Think of it less like a random lightning strike and more like, say, hurricane season. You know it's coming eventually, so you don't run around panicking, you prepare.
That is the bottom line. Market drops have always happened, and you can bet they always will. And you know what? Just understanding and accepting that it's inevitable, that is the absolute first step to taking the fear out of the equation. Because when you know the storm is coming, you stop panicking and you start building a stronger shelter. Preparation is absolutely everything.
All right, so if we're going to prepare for this storm, we need to know what we're actually up against. What exactly is a market crash, and what causes these things to happen? Let's get into it and really dissect the anatomy of one.
So the technical definition is actually pretty simple. When a major index, like the S&P 500, falls by 20% or more from its recent high, we've officially entered what's called a bear market. You know, a 10% drop, that's called a correction. But that 20% number, that's the official signal that things have gotten pretty serious.
And you know, a crash almost never has just one single cause. It's almost always this toxic cocktail of factors all mixing together. As you can see here, you might have some underlying economic problems, right? Maybe rising interest rates or a recession on the horizon. Then you get a speculative bubble where assets just get wildly overpriced. And then all it takes is one little spark, a geopolitical event or just a sudden change in mood to trigger that investor panic. And that panic, that's like pouring gasoline on the fire.
And this timeline drives home what might be the most important point of our entire conversation. Just look at the data. Black Monday back in '87, the dot-com bust, the 2008 financial crisis, even that incredibly sharp COVID crash in 2020. They were all painful, no doubt about it. But what do they all have in common? The market recovered, every single time. Now, the time it takes varies, sure, but that pattern of crash and recovery is constant.
Okay, so we get it. We know what a crash is, and we know that recovery is, eventually, inevitable. So now for the most important part. What do you actually do? It's time to pack our financial survival kit with the strategies you need to ride out the storm.
So here's the moment. Your portfolio is bleeding red. Your gut, the news, every fiber of your being is just screaming at you to get out now before it all goes to zero. This right here, this is the moment of truth for every single investor. So, what's the answer?
The answer, in pretty much every single case, is a huge, emphatic no. 1,000 times, no. I know it feels completely counterintuitive, but resisting that one powerful urge to sell everything is probably the single most critical financial decision you will ever make during a crash. Let's break down exactly why.
Okay, so why is panic selling so incredibly damaging? Well, first off, until you sell, your losses are just on paper. They're temporary. The second you hit that sell button, you've made them real and you've made them permanent. Second, some of the market's biggest single-day gains happen right after the biggest drops. If you're sitting on the sidelines in cash, you miss that whole rebound. And finally, trying to time the market is a fool's game. Getting out is easy. Knowing the exact right moment to jump back in, it's nearly impossible.
So let's get proactive. Let's build that survival kit right now. These are the 4 essential steps to protect your portfolio. First, diversification. It's the classic, don't put all your eggs in one basket. Spread your investments out to minimize your risk. Second, and this one is absolutely non-negotiable, a cash buffer. Having 6 to 24 months of living expenses in cash means you are never forced to sell your investments at the worst possible time just to cover an emergency. Third, rebalancing. This is a disciplined way to sell some assets that have done well and buy those that are down, which basically forces you to buy low and sell high. And finally, pay down that high-interest debt. This makes your personal financial situation so much more stable, which makes you more resilient no matter what the market is doing.
All right, so our defenses are up, we've built our fortress, but now it's time to switch gears. Because for those of us who are prepared, a market crash isn't just about survival, it's about opportunity. It's time to get just a little bit greedy while everyone else is being fearful.
When a crash hits, you really have two choices, two paths you can take. You can be the panicked investor, totally driven by fear, who sells at the bottom and locks in all those losses for good. Or you can be the prepared investor, the one who acts strategically, has their cash ready to go, and sees the crash for what it truly is, a massive sale on high-quality assets.
So, how do we actually capitalize? First, you can buy shares in fantastic companies that are now temporarily on sale. Second, you can use dollar-cost averaging. That just means investing a fixed amount of money on a regular schedule. It automatically makes you buy more shares when prices are low. Then there are some more advanced strategies. Tax-loss harvesting, for example, lets you sell investments that have lost money to offset the taxes on your gains. And a Roth conversion, where you move money from a traditional IRA to a Roth when your portfolio's value is down, can save you an absolute fortune in taxes later on. These are really powerful tools for the prepared.
But, when you boil it all down, surviving and even thriving through a market crash comes down to one thing: your mindset. The strategies are simple, really, but controlling your own emotions when things get crazy, that is the hardest part of all.
I want you to take a look at this number. $32,665. What in the world does that mean? Well, that's what a $10,000 investment in the S&P 500 would have been worth if you had missed just the 10 best days in the market over a 20-year period. Just 10 days. But what if you hadn't missed them?
And this chart, wow. This shows the absolutely devastating cost of giving into that fear. If you had just stayed fully invested, your 10 grand would have grown to over $65,000. But by trying to time the market and missing just those 10 best days, you literally cut your return in half. This right here is the ultimate argument for staying the course. The price of bailing is just way too high.
So if you remember nothing else from our time today, please let it be these three things. 1. Stay calm. Your emotions are not your friend during a downturn. 2. Stay the course. Your long-term plan was made for moments exactly like this. Trust it. And 3. Stay prepared. A storm is coming, but for the prepared investor, that's actually a good thing.
Because really, it's not a matter of if, but when. The strategies are clear. The history is undeniable. So the only question left to ask yourself is this: when that next storm finally hits, are you going to be running for cover, or will you be the one who's ready to dance in the rain?